Human-induced climate change has caused some impacts that are already irreversible and to an extent beyond the ability of natural ecosystems and human systems to adapt. The impacts observed today are appearing much faster, more disruptive, and more widespread than what was expected 20 years ago. I am Holly, ESG specialist at Mirae Asset. In this video, I will share insights on physical climate change, what it means for investments, and how we consider climate-related risks and opportunities in our investments. Earlier this year, the IPCC published the report Impacts, Adaptation and Vulnerability, highlighting the latest science around the impacts of climate change on people, ecosystems, and biodiversity, as well as the capacity of our society to adapt to climate change. Currently and in the future, Asia is identified as one of the regions most vulnerable to climate change. For example, drought conditions in Asia could increase by 5 to 20% by 2100. Parts of China will spend up to 60% of the time in drought. Energy demand will increase due to rising temperatures and a decrease in precipitation. Most developing countries in Asia will be exposed to high energy insecurity. 1/3 of China's population and manufacturing capabilities may be vulnerable to electricity supply disruptions caused by floods or droughts. Intensified water cycles will increase vector and waterborne diseases, and 80 million people will be at risk of malnutrition globally due to food scarcity. Looking at the issue simply, physical climate change like increased temperatures and extreme weather events will cause disruptions to society and reduce productivity. Lower productivity drives lower economic returns and lower investment returns. The extent to which companies will be affected by climate change depends on where their operations are based, the nature of their business, and the resilience of their business strategy. On the flip side, companies can also benefit if they play a role in climate adaptation, whereby companies can contribute to or adopt adaptation options in their business operations. Let's hear what our analysts think.
So I can think of two major risks for semiconductor companies. One is that in the manufacturing process, we actually use a lot of water. So a stable water supply is quite important for semiconductor companies. And so where you have extreme weathers or droughts that are impacting the water supply, that could be a potential risk. And the second thing is that extreme weathers like snowstorm or very heavy rain could disrupt the manufacturing site as well. But I think companies are pretty well prepared for these risks. They have contingency plans in place to continue the manufacturing process in case these events break out.
Physical climate change creates a lot of new investment opportunities. On the supply side, we anticipate more investments in renewable energies such as solar and wind. On infrastructure, we also anticipate more investments in energy storage, on electricity grid systems to improve the overall resilience of the energy and also power market.
We integrate climate considerations as part of fundamental research to review each company's exposure and resilience to physical climate change. For example, for companies in sectors where climate change is a material topic, our proprietary ESG scorecard includes parameters such as whether the company's operating locations are exposed to climate-vulnerable regions, whether adaptation measures are in place, and whether a significant change in the company's financial risk is anticipated at specific climate scenarios. Under a 4-degree scenario, sometimes also known as the business as usual scenario, where the world continues to operate as it is without low-carbon policies and where decarbonization commitments are not achieved, physical climate risks would be most exposed. For example, under this worst-case scenario, climate hazards such as coastal floods, droughts, and tropical cyclones will likely intensify in India over the coming decades, thus adversely impacting companies with operations there, more so relative to other countries in Asia. This is already observed as India experienced life-threatening heat waves a month earlier than usual this year. with more than 1 billion people subjected to excessive heat. We leverage these insights to inform our investment decision-making and engagement efforts. Thank you for taking the time to watch this video. For more information, please refer to our Responsible Investments Report, which also includes our TCFD report on how we integrate climate change into our investment processes. We look forward to sharing more insights on ESG and climate change in future videos. Thanks for watching.